Now, in Australia, the New South Wales Liberal Party is calling on the federal coalition to reduce tax breaks for capital gains. For more, though, let's bring in Matt Grudnoff, Senior Economist at the Australia Institute. Matt, lovely to have your company as always. Now, break it down for us. What is happening here?
Well, basically, the Liberal government are calling on the federal government. The federal government currently have an inquiry into what's causing property prices to increase so rapidly. And the state New South Wales Liberal government is telling them that they should wind back capital gains tax discount. Now, the capital gains tax discount basically means that you pay half as much tax as you normally would on a capital gain. So capital gains, you buy an asset for one price and you sell it for more. If it's so that's your capital gain. If you earn income as wages, if you earn income as interest on a bank, if you earn profit from a business, you all pay your marginal rate of tax on that. Capital gains is the only thing where you pay half it. So it's a discount, it's a 50% discount on the amount of tax you might pay.
Now, what's the likely conclusion here? What will the federal government come back and say to this? What do you think is likely going to happen here?
Well, the Morrison government campaigned really heavily against these kind of changes. At the last election and the election before that, Labor went to the election wanting to wind back capital gains tax discount and negative gearing, and the federal government, the Morrison government, basically said, no, that's a bad idea, and they ran very strongly on that. So I can't see Morrison winding this back, given that his strong stance previously. But what the Liberal government, the New South Wales Liberal government's position shows is just how important the capital gains tax discount is to house prices. Basically, the poster child of these tax concessions is usually negative gearing. That's the one that gets all the press. But negative gearing, all it does is it means if you make a loss, then the taxpayer pays for some of that loss, but not all of it. So you still have to carry a loss. The capital gains tax discount is the cherry at the end, if you like. There's no point making a loss month on month, year on year, if there isn't a payoff at the end. And when the government first introduced the capital gains tax discount back in 1999, that was when house prices first began to really take off, because it basically meant that payoff at the end, that capital gain you got after you sold the property, was now worth so much more because you paid so much less tax on it.
Yeah, now we know property prices are soaring at the moment. We know investors are buying lots of properties at the moment as well. Does this just mean that younger generations simply won't be able to afford to buy a property?
Yeah, that's exactly what it means. We're seeing a generation basically finding it harder and harder to get into the property market. And more importantly, whether or not you get into the property market is increasingly about who your parents are, not how hard you work. So if you have access to the bank of mum and dad, if you've got wealthy parents who can help you get into the property market, then those people are able to get into the property market. But if you're unfortunate and you don't, then you're stuck out, you're stuck renting. And the more people we see enter the property market, the more investors we see get in, the more rental properties there will be and the more renters there'll be. So if more houses are sold to investors, then there will be more renters, which means there'll be less owner-occupiers. And that's what we're seeing in the macro data. We're seeing the number of renters increasing over time and the number of owner-occupiers shrinking.
Now, we also just, I guess, looking at the bigger picture here, we're seeing like the rise of, TikTok influencers and people scrapping the traditional 9 to 5. And once upon a time, it used to be you'd get to a certain age and then you'd buy a house and you'd get married and have kids and go like that. But it's just not like that anymore. Do you think we are seeing a major shift here?
Yeah, look, absolutely. We're seeing a shift. And I mean, the pandemic, again, another example. I think after the pandemic, more people are going to work from home because we've seen how viable that is. The problem is that our society is kind of set up so that you own your own home. So let me give you a really good example. The age pension is paid out as if you own your own home. So we know that age pensioners who rent in retirement are far more likely to be in poverty than those that don't. So if we have an entire generation that goes through and doesn't get into home ownership and they get into retirement later in life, we're going to have so many more people in poverty in retirement.
Matt, we do have to wrap. Sorry, Matt, we do
It
have
is,
to
we're
wrap
going
things
have to
up there.
increase the age pension.
Lovely to have your company. Matt Grudnoff, thanks so much.
Thank you.
The bottom 20% get nothing. They're really unfair tax cuts.
People want to see much stronger action from the government when it comes to climate change.
It's no coincidence that we have a wages crisis in Australia.
Transitioning to net zero emissions, it doesn't seem like there's much room for gas.